I tried to tell you that the real estate market is heating up, but so many people thought I was crazy. Back in early January, I made a video talking about how now is the time to start buying real estate because it's about to go on a tear. I saw from the data that inventory was dropping rapidly, pending sales were rising, and we were going into the springtime, which traditionally is the hottest time for real estate. And sure enough, over a month later, we are now seeing that exact scenario play out, and most people are now wondering what is going to happen. Well, I can tell you subjectively, we've had more offers than ever on our properties, some even getting multiple offers, and we're getting more showings by the day. So now that the real estate market is officially turning and the media is finally going to catch on, I'm going to go over with you how you can invest in this market and what you should be doing no matter what your real estate investor status is. Doesn't matter if you're just getting started or you're looking to scale. This video is going to cover every aspect. If you're new to my channel, my name is Ryan Pineda. I'm a real estate investor and entrepreneur. I've done over 500 house flips. We own over 550 rental units, and I've got 6 different businesses that do 7 to 8 figures in revenue every single year. So before we jump into investing strategies, let's talk about the statistics and data and where they're at today so that they can help us predict what the future is going to look like for our investing strategy. The first piece of data that we have to look at is the inventory rate and the contingency rate. Inventory rate is simply all of the available active homes for sale divided by the amount of homes sold in the last 30 days. Basically, this tells us how many months of inventory that we have in a market. For example, if you had 6,000 homes that were active and 2,000 that were sold in the last 30 days, you would have 3 months of inventory. Meaning if no new homes were to hit the market, it would take 3 months to sell out the remaining supply. Now, 3 months is what we would call a neutral market, meaning it's not a buyer's market or a seller's market. There are an equal number of people trying to buy and sell, and this is a very good spot to be in no matter what side you're on. Anything less than 3 months is what we'd call a seller's market. Throughout 2020 and 2021, we were in an extreme seller's market, in some cases less than 1 month of inventory. This is why we saw price appreciation happen so quickly. But that ended up stopping when the Fed decided to double the interest rates, and that led us to going into an extreme buyer's market, where in Vegas we had 5 months of inventory. And those 5 months of inventory caused our prices to go down about 10%. And so what you start to realize in real estate is that your prices are very heavily correlated to how many months of supply you have for inventory. If you've got high supply, you can expect prices are going to drop. If you've got low supply, you can expect that prices are going to go up. And if the supply is neutral, you can expect prices to remain flat. But here's the thing, inventory only calculates what's actually happened. There's another tool that some might think is more important that can tell us what's to come. And this is what I call the contingency rate. And the way that you find the contingency rate is by taking all of the active homes available for sale and dividing them by the amount of homes in contingent or pending status. Contingent or pending status means that the home is under contract right now to sell. And the reason it's important to watch this number is because it is a precursor to how many months of inventory that we have. If a property goes in contract today, it's probably going to take on average 30 days to sell. And so that data is not going to hit until all those properties sell. And this was the premise of my video in January when I said the contingency rate is dropping very quickly, and that's going to cause the rest of the market to catch up in about a month, and you're going to start seeing supply go down pretty quick. In Vegas on January 1st, we had 4.6 months of inventory. Now, as of today, February 20th, we have 3.7 months, which is a really big swing in such a short period of time, especially considering how cold the real estate market was. But that's not all. We can tell by the contingency rate that it's going to continue to drop. Back in January 1st, the contingency rate was about 4 months. Now it's at less than 2 months. So I expect here in Las Vegas that we're going to be at 3 months or less inventory come springtime, which means we're going into a neutral market at the very worst, but there's also a chance that we could be in a seller's market if things continue to drop at the current pace. So you might be asking yourself, why is this all happening now? What's changed? Well, for one, I think the buyers have realized the market isn't crashing, and many of those who've been on the sidelines just waiting for this historic crash have now come to the realization that it's not going to happen and they need to settle. Also, many buyers are now filing their 2022 tax returns, which are going to make them eligible to buy the home that they want for this year. I remember when I first got started in my real estate career, I always had to wait to file tax returns again so that I could get my higher income to qualify for a bigger house. 50% of people have interest rates that are under 3%. So all of those people who've locked in those low rates are not selling. They have no reason to sell unless they absolutely had to. So you're basically removing this giant supply of people who would have otherwise sold if they knew they could get the similar rate on a new home, which isn't the case. Also, many people who've bought in the last 18 months would either break even or potentially lose money on a home they bought, so they're not selling either. And basically what that means is this is all the perfect storm for real estate to do really well, even though the overall economy may not be doing so well. And trust me, I see all of the different headlines with the tech layoffs and all of these things, but what they don't tell you is that the tech companies are simply going back to workforce numbers that were similar to what they had pre-COVID. Almost all these tech companies went for ultra growth the last couple of years and realized that it's not really sustainable, and a lot of people working there weren't really doing their jobs. And so unemployment overall is still extremely low, and companies are just getting more lean to get what they actually need. So I've been hesitating to finally declare that this is the end, but I'm confident enough to say at this point, it is time to start going on offense with your real estate investing. I think we have turned the corner officially, and things are about to get really good for investors. And speaking of investors, if you want to be around other high-level ones, you need to come to Wealthcon April 4th to the 6th. It's a massive event we're going to be holding in Hollywood, California for entrepreneurs and real estate investors. I've got people like Lewis Howes, Chris Crone, Neil Patel, and many others coming to speak. I've even got my fellow YouTuber Robuilt coming to speak, even though he somehow thinks his hair is as good as mine. So you can learn more about that event and all of our different coaching programs by going to wealthyinvestor.com. But anyways, what should you do knowing this information that I'm telling you? Well, number one, if you are just getting started in real estate and you're looking to buy a primary home or your first investment property, I would say now is the time. I think that if you were trying to wait this last year just hoping that things were going to go down or that rates were going to change, it's not happening. Essentially, it's now or never, so you gotta go out there and start buying real estate. And the thing that I've said throughout this whole time is that if you're good at getting deals, it really doesn't matter what the market's doing. If you're gonna go buy a house that's 40% off, it doesn't matter if the market drops 10%, you're gonna be just fine. So get off the sidelines and get into that first deal. If you're looking to get into flipping or wholesaling, I think it's an amazing time. Our wholesale fees have now been increasing ever since the market started heating up. In fact, we just closed a wholesale fee for $35,000 last week, and then we closed a novation deal, which is a form of creative finance, for a $103,000 profit. So there's lots of money to be made on the flipping and wholesaling side right now. And if you're looking to buy rental properties or Airbnbs, it's also still a really good time even though interest rates are higher. There are still properties that cash flow even with the higher rates, and my Airbnbs are still cruising despite people telling you that it's too saturated. And we actually just launched a new program for Airbnb called Pro Host that you can also check out over at wealthyinvestor.com. And here's the thing, the media is still gonna tell you to be scared and all of this stuff, but the reality is the numbers don't lie. And the numbers that I shared with you are the most important numbers when it comes to real estate investing. You could look at all of this other stuff that's happening in the economy and the stock market and all that, but as it stands right now in the short term, the biggest predictor of the price are the inventory and contingency rate. And Warren Buffett always says you should get greedy when everyone's fearful. There are a lot of fearful people right now, and that's an opportunity for you. Real estate is still extremely undersupplied, and you can take advantage of that. And if you're ready to start finding real estate deals, definitely check out this next video. It's going to teach you how.